Okay. Good morning, good afternoon, good evening, wherever you are joining us from. Good to have you with us. Hey, Linley. Hey, Diana. Hope you're well. Now, in this video, we're going to be looking at the ADP non-farm, which was released last night at 99K. I was looking at it at 100, at the low hundreds. It came out at 99K. Tonight, we do have the NFP to be released. So we'll be looking at all the currency pairs and possible trade setups with the NFP tonight. But first, okay, so I hope you've been doing well. I hope you have been trading well. It has been relatively straightforward, especially on gold and on the yen pairs. We have been waiting, or it's been trending easily. We have been waiting for euro pound. It didn't really happen. The euro did have a small breakout to the upside. We had the Aussie dollar, the Kiwi dollar pushing up slightly, but it's all back down to the yen and on gold as well. Okay, so I hope you've been trading well. If you have, do put it into the chat. Let me know how you've been going, good or bad. Do share. If you're on the session, do drop a message and say hi. Let me know where you're joining us from. Hey Anil, how you doing? Hey Noah Chuku, good to see you. Hey Jumarinas, good morning. And you can remember, well, you can remember, you do remember to put it into the chat if you have any questions. Sorry, I lost my train of thought. Put it into the chat if you have any questions at any point in time. I'll be happy to help you with that. And you can help me out massively by remembering to click on that like and subscribe button. That would help massively. Okay. And if you're watching this after the live stream, leave a comment, leave a feedback. Okay. Now, what has happened? What has happened since the last time we spoke? 8:15 p.m. GMT plus 8 last night, we had the US ADP non-farm employment change number. It was a, where was it? It was a 122K. It got revised down to 111K. Expected 144. If you remember, I was just looking at the video from yesterday. I was saying, right, I'm expecting a relatively bad number on the ADP. I was thinking that it would be the low hundreds, and it came out at 99K, right? It came out at 99K. Again, I drew this from what we saw on JOLTS, the jobs openings being the lowest since January 2021. Not going to see, related to not going to see big moves or big data on the ADP non-farm. And that's how I came to about the low hundreds, and it came out at 99. So what we saw with this news at 99 at 8:15 p.m. on the dollar index, when I, bring that back. When I zoom it in, this was at 8. Oh, wait, I'm on H4, that's why. Okay, wait, I've lost my box. Okay, there. All right, sorry. Bring that box back down. Okay, there we go. So at 8:15, this was at, zoom in some more. Okay, this was at 8, where we saw the dollar index was sitting at 101.18, shot right down to 100.96. It was way outside of the Bollinger Band, came right back up to 101.33, and then pushed down to our target at 100.90. Right now, currently breaking below that level. So that was because of, firstly, the ADP non-farm number 99K saw that dollar spike to the downside on a weaker employment number. Then unemployment claims at 8:30, 15 minutes later, came out relatively flat at 227K. while ISM services PMI came out at 51.5, final services PMI at 55.7. So no big surprise there, right? So why it shot right down and then bounced right back up is because my view that it was such a low point, it was outside of the Bollinger, it came down to that 61.8 level, tested, we saw that bounce right back up before continuing down again, right? So now we're looking at the Fed, the CME Fed Watch tool, we are, refresh that, at a, when it loads, 57, so it was just 59 just then, a 57% chance of a 25 basis point rate cut and a 43% chance of a 50 basis point rate cut, right? So as the employment data gets worse and worse, we got another one pending tonight, but as the employment data gets worse and worse, we see a push towards that 50 basis point rate cut because it looks like the Fed needs to come in, jump in, and rescue the situation. Right? They've rescued the situation, somewhat rescued the situation on inflation growth. Now that they have kept rates this high for that long, it slowed the economy down. Jobs openings are low, employment numbers are low. We're going to look at the unemployment rate tonight. If that's terrible, again, I anticipate that 50 basis point number is going to jump even more. It looks like the Fed needs to come in and rescue the situation, right? To try and stimulate, or not stimulate, but try and reduce that. I don't know what's the word, to reduce that comfort of that high interest rate. So then you cut rates a bit just to try and push more money back into the economy. Okay, so that's what we're looking at because of that news. Now, with that said, today we had a whole bunch of news, didn't do too much. I've just been selling the yen down. We were talking about this on the Discord group as well. Tonight, so it's all pretty much selling the yen down all the way through to tonight. Okay, so I'll tell you more about the yen shortly. I have some thought about the yen. I'll tell you about that shortly. Stay tuned. At 8:30 p.m. GMT plus 8, we have Canadians. So right at 8:30 p.m., we have the Canadians with their employment change data looking to go from a minus 2.8K to a 23.7K. Unemployment rate looking to go from a 6.4 to a 6.5. Remember, the BOC had just cut rates by 25 basis points. It seems like it's something they've done month to month already, but it looks like it's going to be insufficient as we are likely to see unemployment rate climb slightly. It was, look at this, in June, it was 6.1, rose to 6.2. In July, it was 6.2 up to 6.4. It stayed at 6.4 in August. Now in September, it looks like it might get from a 6.4 to a 6.5. Trending to the upside, not very good news for the Canadian economy. So we're looking to that as well on the loonie. And then the big news for tonight, the big news for the week, the big news for the month in the lead up to the September 18th Fed decision is the non-farm employment change number. This is the last employment data, the last major employment data to be released before the Fed Reserve's decision on interest rates. And what we're looking at is average hourly earnings, 0.2 to 0.3, no big surprise there, no big change expected. Non-farm employment change, looking to go from a 114 to a 164. Again, ADP non-farm is not a direct correlation to the non-farm payrolls, but we've seen JOLTS, the jobs openings, being the lowest since January 2021. We've seen the ADP non-farm being released at 99K. I don't think we'll see non-farm employment change at 164. It's currently at one, or was previously at 114. Why don't you put it into the chat? Let me know, what do you think it's going to be? Do you think it's going to be, I'll give you two options. Do you think it's going to be below 100 or, let's not get that. Do you think it's going to be around 100? So it's going to be below 114? Or do you think it's going to be above 130, 150? Put it into the chat. Let me know, what do you think? No harm, no foul, just a best guess scenario. Looking at the non-farm employment change number, is it going to be below 114 or above 150? Let me know. Okay, so while you're typing that in, tonight is not just about that non-farm employment change number. It's also down to the unemployment rate for the US, right? You can see here that in May, since April, when it went from 3.9 to 3.8, May 3.8 to 3.9, June 3.9 to 4, July 4 to 4.1, August 4.1 to 4.3. Right now, or in August, it was at 4.3. The question is, do you think it's going to drop to 4.2? Right? If it does drop to 4.2, that might be relatively good news or not terrible news. I think the risk here is that it goes from a 4.3 to a 4.4 or a 4.5. Right? If it goes to a 4.4 or 4.5, then again, we're going to see, or it's going to reinforce the need for the Fed Reserve to come in and rescue the situation with a 50 basis point rate cut. Okay, so all this is now coming to the point of 25 or 50. If employment numbers gets terrible, it's going to be 50, more likely to 50. If it goes from a 4.3 to a 4.2, maybe we might see 25 being a possible scenario. It is, you would see here, pretty much borderline. So we're going to make a best guess at that time on what could happen. Okay, anyone with a guess on what you think could be for the non-farm employment change number and also the unemployment rate? If you want to make a best guess, take a sip of water. Okay, Diana thinks 120. Okay, so I would say the highest I think it would be 120. I think that 105 would be something that I'll be looking at. But yes, the non-farm does have that tendency to surprise markets. It does have a chance to be a little bit more different than you would expect. Okay, so we'll run through the scenarios of what could happen on the different currency pairs. I'm actually more focused on the unemployment rate, whether it's going to go from a 4.3 to a 4.4, 4.5, or it's going to slow down. It's always unpredictable. It's like blindfolding yourself and throwing a dart. It will hit any number it wants to. Okay, especially with my dart skills, I'm terrible. I'll probably hit the wall, not the dartboard. Okay, with that, then we also have Member Wallace speaking at the economic outlook at the University of Notre Dame in Indiana. Don't think it's going to do too much. With all that, let's look into what could happen next week as well. Monday looks like it's going to be relatively okay. Tuesday, we have employment numbers to come for the UK. GDP for the UK on Wednesday, CPI for the US on Wednesday, so look out for that. 2.9 to 2.6. We're going to pay attention to that on Wednesday. And then on Thursday, interest rate decision to come from the ECB. So that's going to be interesting as well. And then on Friday, we might get a bit of a breather again. Okay, so watch out. We do have a couple of big news events, CPI numbers to be released for the US, ECB interest rate decision to be released for the Eurozone as well. Now, with all that said, let's look at the charts. Right, so here we have it, the dollar index. Do that a little bit, take that away. Okay. Keep that. Okay, here we go. All right. Dollar index, where are we? Okay. Don't need that line anymore. Take that away. So yesterday, we were saying that the dollar index currently at 101.25, break that 50% retracement level, which is that dotted line there, to trade down to 100.90. Right, on release of the ADP non-farm, it came to 96, bounced back up. Only this morning or afternoon came down to 100.90. So that's all done. Take that away. That 60% level is 61.8 is done as well. Take that away. Now, dollar index is sitting right there along the Bollinger Band. That's fine. I don't need that. I'll take that away. I'll keep this here because it's right where it is. Today being the 6th of September. Okay. At this point now, just below 100.90. It's currently at 100.86 and sitting around there. I'm anticipating, right? If you look at what happened previously, big push down, came down to this point, bounce, came down to this point, bounce back again. Now, if I took this line all the way down to that point, okay? Again, remember that this is the 18th of September where we have the interest rate decision to come from the Fed. So what I'm looking at here on the dollar index is that it's sitting there, most likely trending down. Most likely what I'm anticipating is a continuation to the downside. Right? A continuation to the downside. Now, if it breaks this point, I want to see it test 100.55. It's not that far away. It does have a chance to get there. 100.55 could bounce. Okay. So this is what I think is possible. We've seen that push up, come back down. Hey Ahmed, how are you doing? I think that it's going to stay above this point for now. Okay, in general, what I'm looking for today is currently at 100.90. I'll put it at 100.90 because it's at 100.88. So it's currently just below 100.90. All right. It could consolidate slash retrace briefly, but I'm looking for downside to 100.55 support level. And that's also with the NFP pending. But I think that it could bounce from support. Maybe. Okay. So that's what I'm thinking is that it could do this, and then this again. Just because of what happened back here in August, late August, where it came down, bounce, it came down, bounce, and it had a big push back up. I'm thinking that it could push back up again, test, and then squeeze down. Okay, so that's the view on the dollar index. Could retrace or consolidate briefly. But I'm looking for it to test that support level back down. One level to watch out for would be 100.20. No, I'm not too bothered about that point. Okay, so that's what I'll be looking for. Could bounce back up. I'm just thinking, where could it bounce back up to? No, okay. I think that's fine. Thanks for that, Ahmed. Yeah, US yen has been really nice to me for this month, for last month and this month. Okay, let's look at that. I'll push this to the side just so I can look at a candle. Then now, so that's what we're thinking on the dollar index. It's going to sit around this range for a while. Look for it to test up, break down, test support, and possibly bounce back up again. Now, with that, then looking at the Kiwi dollar, right? Obviously, with the dollar index, with the dollar index pushing down so strongly, we didn't see the Kiwi dollar break that 38.2 level. In fact, we saw it push back up again, kind of fulfilling what we drew previously, that head and shoulder pattern, or inverted head and shoulder pattern. Now at this point here, we're looking that if the dollar does weaken further on the NFP, right, then you're looking for it to break above this point, which, if you think about it, it should coincide with that 50% level. Okay, so that's the point you're looking at a 50% level. If it does break above this point, forming a flag up. You're talking about the yen, Ahmed, or which one? I'm looking at this as 6245. Stop loss would be no more than 20 pips. Take profit, I'll go for that up there at 50. Right? And you see that that's forming up as well. Oh, Kiwi dollar, yes. We see that pushing back up. In fact, you might even have a channel to the upside. So I might do this, test, come back down, and then do that. So breaking out to the upside. Okay, so that's what I'll be looking for. 6245, 20 to 50 to the upside. Looking to buy at 0.6245, stop loss 20, take profit 50 to the upside. And this time, this is on DXY weakness. There we go. Again, whenever I come to NFP, I will highlight the different scenarios on weakness and strength scenarios. Then onto the Aussie dollar, very, very similar. So that didn't trigger, take that away. Very similar pattern where you would see that it is trending to the upside, not quite a channel. You need it to touch 2 times to form a channel. So it's touched 2 times on the bottom, not so much on the top. So because of that, I would just consider it as an upward move. Consolidate along this point. 50, yes. Push up, yes. Double. Okay, so what you'll be looking at in this case, I would say 6755. Stop loss about 25. Take profit, you have 65 to the upside. Hey John, how are you doing? Right, so that's what I'll be looking out for. 6755, 25 to 65 to the upside for the Aussie. Buy at 0.6755. Stop loss 25. Take profit 65 to the upside on DXY weakness. Good, good, good. Now, down to the pair that I haven't had any luck with. Not that it's been bad trades, it's just that trades have not been reacting at all, or we haven't had that reaction or the setups that we've been looking for. So same thing, we're expecting it to push down, to bounce off. It's taken a long time to push down, looking for it to bounce off. I think that it's going to get choppy because we could see both the Aussie and the Kiwi push to the upside. If we see the Aussie and the Kiwi push to the upside, that's going to conflict with each other on the Aussie Kiwi. But if you think about it, Aussie looks like it might have a little bit more upside compared to the Kiwi, just slightly. It's not just about how much it can move up by, but when it comes to that correlated pairs, it's also about which one moves more with more volatility, with more impact, right? If the Aussie spikes up and the Kiwi just slowly climbs up, then we're going to see this push right up. Or if Aussie slowly climbs up and Kiwi spikes up, then we're going to see it come crashing down. So again, we'll still be looking for a reaction here. I do prefer to look for it to bounce up. Nothing at this point. I would be quite happy to move this right across and look for that to continue. Naren says RBA Gov was hawkish yesterday, so not moving down too much. Were they hawkish? I think they were. They were slightly hawkish, but I think they were talking about, or was it yesterday or 2 days ago, a couple of days ago, where they were talking about how the Aussie economy wasn't doing too well, right? That's why for the past couple of days we were looking for it to push it back down. So we might be looking at the Aussie to push up, push back on reduction. Yeah, I think it. I think it's not so much hawkish. You push back on reduction because it's more like they weren't ready to reduce because inflation, CPI was still climbing, was still high. So that's why it pushed back. So I think it wasn't a hawkish stance. It was more like a not ready to move kind of approach. Right. So I think that Aussie Kiwi. Let me think about it some more. Yeah, I'm quite happy with that. I think we'll keep that. I was just thinking whether there's a chance it could break down, but we want to look for the reaction here, right? If it does break down, there is that downside move, which you could be looking for if you're looking at 1.0795. Stop loss would be about 20. Oops, 20. Take profit, you could do a 60 to the downside. So you have both that opportunity on the Aussie Kiwi. Just want to see what happens at 1.08. Okay. In fact, I would move this. If you're looking to sell this, I would give you a bit more space at 1.0790, 25 to 60 to the downside. That way. All right. Then with that, we look at the pound. I don't really, not too keen on the Aussie Kiwi. I think Aussie and Kiwi fine. Pound, dollar, we had been looking for a possible push to the downside. Didn't happen. Take that away. And now you know why I've been a bit biased on the yen, because all our trades that we talked about on the yen have been triggering. The Aussie, the Kiwi, the pound dollar for the last couple of sessions hasn't been triggering our trades. All right. It's just been choppy. It has been moving, but not something that you're going to be, it's not something easy to trade on the pound, right? Because you see it sitting right across, and then the next moment it spikes up and sits right across, pushes up and sits right across. So it's, you can trade the trend to the upside, but it's also in that kind of situation where it trends and it consolidates and spikes. It could very well spike the other way as well. So it makes it very tricky. Now, on this, now that it's broken 38.2, we're looking at 61.8 possibly holding. All right, 61.8 at that point, it's come right up to there, and then it's trying, it's struggling, it's testing again. I want to try and consider the chance, and let me just check this support. Okay, that support is fine there, but that support is fine there, but let's find something more relevant in the near term, right? And I would actually prefer this whole thing. Oops. I would actually prefer this whole thing here as my support, right? Right in the middle there. And it forms nicely at that 1.3055 level. So I'm catching this point here, and I'm catching this point here, and that's my whole support. Now back to the H1 time frame, that's where we have these levels. And we see that happening. Okay, so what I'm actually thinking is that could the pound dollar, if, because we're talking about dollar weakness, what if the dollar strengthens, right? And we know that that's quite possible with the non-farm. It could just come up with a number and then dollar strengthens, but regardless of the number, just because it's at such a low point, it could, instead of coming down before bouncing, just bounce back up before turning back down again. So I'm thinking that we might actually be looking here on a pound dollar. If it breaks down, oh, look at that. We got 1.32 right there. Right, we got 1.32 right there. So what if it sits there, it pushes up, and then it comes right back down? Then you could actually be looking at 1.3170, stop loss about 30 pips, take profit right down to 80 pips, 100 to the downside. Right, we'll catch that previous low first at 80. So I'm thinking of this, if the dollar strengthens, we might see a spike up above 1.32, catch a couple of stop losses or trades or orders there, and then push right back down. So 1.317030 to 80 to the downside. Something to think about. Now sell 1.3170, stop loss 30, take profit 80 to the downside on DXY strength as an alternate scenario. Good. Right, let's look for that. Naren says, I agree with pound cycling down from 1.32. Cool. I love it when you guys agree. I'm not saying that it's always going to work out, but at least we, with more confluence, maybe we get a better chance. Okay. Thanks for that, Naren. Then onto the euro dollar, right? We had that push up, we had that triangle. I was actually very keen on this as we finished our session and it broke to the upside, right? It started pushing up. And that's why yesterday's session I put a thumbnail as breakout potential on the euro. But it broke out and sat there, and then they had the big tail as the ADP non-farm got released. It came right back down, the dollar strengthened back before pushing back, and then that was way too late for me as it pushed up. When I looked at it this morning at about that point there, I just thought it's going to slow down because with the non-farm tonight. So take that away, that triangle is done, that line is done. You see that anyone got onto the euro, let me know as well. We do have that trend line to the upside. We've broken 38.2. I'm pretty sure, I'm pretty sure we are at 50. Right? We came up to 50 and we're testing slightly lower. So what we're looking at, or what I'm looking at for at this point, as it pushes down, dollar showing that strength, that retracement that we talked about, no big surprise. I'm looking at this pushing back down slightly to test and to continue up, just like what it's been doing, right? Push down, test, and spike up. Push down, test, and spike up. Now, if I took this, hey, we can look at um, hey media. Sure, I'll just shorten it. We look at US oil shortly. Usually on an NFP day, wouldn't make a lot of sense to look at oil, but we can have a look at that. Okay, so there we have it pushed up. Okay, so what I'm thinking is euro test, push back up for a big upside move, right? Okay, good. So I think that, it's looking to sell the pound down, it's fair enough. I think that I might actually be more tempted, or it would be a bit safer, relatively safer to look to buy when it breaks above 61.8, or if it breaks above 61.8, 1.115, no, 1.1145. Stop loss tight, 20 pips at the max. Take profit way back up, 55, 60 to the upside. So that's what I will look for on the euro. Needs to stay above 23.6. I'll keep that line there. Okay, that's what I look for, above 61 point. Okay, so 1.1145, 20 to 60 to the upside on the euro. Fine. 1.1145, stop loss 20, take profit. 60 to the upside on DXY weakness. Then onto Euro Pound. Dinah, how are you going? Waiting for the Euro Pound. Look at that. It's just playing, testing our patience, playing with our emotions. As we've been talking about this since Wednesday, well, since Monday, since Tuesday. Monday, Tuesday, Wednesday, Thursday this week. We've been waiting and hoping and analyzing that it would break 1.8435, 8440. Getting tired of waiting. Same here. It might. Again, I said this yesterday. If the pound dollar comes right back down, it'll push the euro pound up. If the euro dollar goes right back up, it'll push the euro pound up. So 1.844020 to 60 to the upside. Maybe we'll keep it there. Maybe that will happen. We're all tired of waiting already. Yeah, it is. Naren just said Euro Pound and Aussie Kiwi are slow moving pairs. They're correlated pairs, and that's kind of reason why I don't usually look at the cross pairs. I look at the majors. I'm just doing this because I know a couple of you like looking at this cross pairs. So I'm just adding in a few cross pairs just to satisfy you guys. All right. Okay, so nothing much here on the Euro Pound, testing our patience. Let's wait for it and let's see what happens. Then on to my favorite pair, the US yen, right? You're most welcome to that. The US yen, it's moved exactly as expected. In fact, wait a minute. My trade's closed out. Okay, cool. My trade's closed out. I had it just at 142.10 and it closed out. Okay, cool. Right, so on to the US yen. It moved perfectly, if I may say that for myself. We spoke about this as it was breaking that low. I was saying could trade up to this area here before pushing right down to this support. And what happened? When it came down slightly, pushed right back up, and then came down. I was being a little bit greedy. I got into a quick trade here right at a right at the start of that, just below 144. Yeah, just below 144, I got into a trade there because it tested and rejected that 23.6 level and then held on to it. Just went, let's see where it goes. Had a big take profit down at 142.10 down there. I actually had it just at this point, the low point here, but pushed it up slightly earlier today. Then as it came down and it broke below that low from yesterday, I got into another trade, I think just below 143, right? Just below 143, and then to the downside as well. So it's worked out perfectly, testing, rejecting, right down to take profit. Let me know if you guys got onto this trade as well. I hope you did. 100 and many hundred pips to the downside. We've taken the US yen all the way down from 147 right down. So I hope you guys were on that ride together with me. That's done now, right? That trade done. Those trades were done. Now it comes to an important point. It's down to a very important point here, crucial, right? What I mean, why I say that is because if you look at this on the H4, the last time it bounced was at, well, the last time it bounced in December last year was at 141. In August 5th, on August 5th, where we had the big Nikkei crash, the Japanese unwinding, we had it crash all the way down to 141 or 142 before bouncing back up again. So this area here is ultimately super crucial, right? It's super crucial at this point. Very nice, Ahmed. 70 pips on that. Very good. Good job. Right. I love it when it's not, I'm doing this analysis and I hope that you guys take action on the analysis. I don't make money with you making pips. I don't make anything, but I just get satisfaction when you guys are taking action on the analysis. So let me know if you guys do that or when you guys do that. So US yen tested December at 141, bounced right up again at 142 in August 5th, bounced right up. So now that it's right at this point, okay. In fact, this morning I was sitting there thinking, it could push back up, right? I was right there on H4 when it was it this one? No. This morning was about there. Right at this point, right, I was actually thinking that the yen could push back up, and TSRI MACD was crossing up. We were finding a little bit of a support there. You see that the candle had a little bit of an upside. I was thinking maybe we'll see it bounce from this point, but didn't. It crossed right back down. So now with the yen at 142.27, I would be very careful to see what happens in this point. Okay, I wouldn't. Well, I say I wouldn't trade it down, but I might scalp. But I wouldn't recommend trading it down within this area. There is about a there was about 120 pip, 130 pip move to the downside. I don't think if you're doing it on an hourly time frame, I don't think it's worth the risk. I'm actually thinking, what if the yen could bounce off this support back up? Not impossible, given what had happened on August 5th, right? It bounced right back up. Yes, that was because of the Nikkei crash, because of the unwinding before pushing back up, but it could come down to this point and bounce. So just be a bit hands-offish on the US yen for now. As much as is my favorite pair, I would say on the US yen for the end of this week, watch out between 142 and 141 support area, possible bounce. Okay, so that's what I'm looking out for. Make sense? If you agree, put it into the chat, say you agree. If you don't agree, put it into the chat and say you don't agree. Let me know what you think. All right. Then we don't need this as well. We don't need this fib level for now. Thanks for that, Ahmed. Appreciate it. Okay, then I don't need that for now as well. I just want that point there. So I want to see what happens here. If it does break, which I'll tell you about next week, we have the next level down here at 138. You would never have imagined talking about the yen at 138, would you? I'm starting to nerd out on the yen already, so I'm gonna have to move on. But yeah, so if it does break, we have 138 and maybe a few levels in between. But I first want to see what could happen at this point. All right. Now with that, then looking at the euro yen, didn't do that, didn't bounce. Take that away. It did come up, test, and push down. Down to this point, so take that away. 200% Linley, fantastic. MUFG said they expect US yen at 140 end of this year. It's almost there already. It's not that far away. I agree with your support levels and bouncing. Cool, awesome. Now with the euro yen, with the yen dropping that way, in that fashion, we've seen the euro yen come lower and test that 61.8 from that move. Okay, so we've seen that bounce, pushing lower. I think that this is where you would shift your view slightly, all right? The yen could bounce, could test and bounce. If the yen does drop, if we want to try and sell it down, maybe it might be time to look at the euro yen a little bit more rather than the US yen because there's a little bit more move to the downside here. So euro yen, what you could be looking for to the downside would be 157.50. Stop loss would be, no, wait, that's too wide. No, 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 no. Hang on. Euro yen, you'll be looking at 157.75. 50 pips stop loss. A big 200, 250. I don't, it's not going to go all the way down. Come on. We have another point there. So about 140 to the downside. Right, something to look at for. If you're not ready to sell the yen, maybe we could look to sell the euro yen to the downside. Maybe the euro dollar disappoints and reverses right back down, dragging the US yen down, the euro yen down, maybe. Then onto the pound yen, didn't break up, take that away. Trying to trade lower, we'll keep that. That's breaking that point, that support level. So we're looking at 187.50, 55, 60 pips stop loss, 240. No, you wouldn't. Yeah, 240 to the downside, especially given that we think the yen, the pound dollar might push down. That could drag the pound yen right back down. Okay. Lingopedia, how are you doing? Lingopedia pops in and says, gold, please. We'll get to that right about, well, after Swiss, CAD, and gold. Then we'll do US oil. Um, I'm running a little bit behind, but hey, a lot of things to talk about. Okay, then now onto the US Swiss franc, the Swissy. Look at that. I didn't get into this trade. I don't bother looking at this. I analyzed this just because it did that. It pushed up, formed that pivot at that 8490, 8480 level, and came right back down, almost picture perfect to the downside. Hit your take profit, now bouncing back up slightly. Right? If you did that, if you got into that trade, let me know. Now, that's the low point. That's done. Take that away. That's done. Take that away. Now, at this point here, big push down, resistance level makes sense. Support level down here makes sense. It's going to retrace. Dollar index is retracing slightly. So consolidate along this point. before pushing down towards the support. I don't think it's tradable. Down, let me see, 8390, stop loss 20, take profit 40. You could do that. I wouldn't. I'll wait for it to come down to the support level at 8350. Let me see. Yep, look at that. And it's right down to where it were in January this year. So look for it at that support level. Could bounce at 8345. Okay, so we'll look for 8345. US Swiss franc. Look for reaction at 0.8345. Key support level. Okay, all right. Now, onto the US CAD, onto the loonie, consolidated to push down. It's working well. If you got onto that, you would be sitting on an almost break even because it came down and pushed back up slightly outside. You see the dot, I'll take that away. Now reduce it down. You see the dot there, it tells you when it's outside of the Bollinger where price could bounce back up. You see the TSRI MACD crossing, looking like it's trying to cross back up, showing you that price could push back up again. If you were in this trade, this is where you close out your trade, right? You would close out down there because it's outside the Bollinger. If you miss that, you close out now because TSRI tells you that it could be crossing back up again. With that, take that away. And again, for all of you who are on the Discord channel, I've just put in a new chat room with the TSRI MACD strategy. You can get access to that. So you can check out the links in the chat room there. You can get access to that, all right? Or rather, you should get access to that. It always helps a little bit. I'm sure it will. Now at this point here, you see that move, it came down to 61.8, it's bouncing back up slightly. Dollar retracing, could push back down. It's retracing, it could push back down. Let me see. That way. I want to see it retrace. I think that if it does push down, we could see it sell down 1.3480, stop loss 20, take profit 35. I don't like it. It's a bit too small that way. So again, very similar to the US Swiss franc, I'll look for a possible, I wouldn't do anything on the US CAD. It could very well bounce back up. It could very well come back down. It's right in the middle. And also, crucially important is that we have Canadian employment numbers to be released tonight as well. So it's going to be Canadian numbers released, US numbers released. Let's say unemployment rate for Canada goes to 6.5. We're going to see the CAD weaken. Then you're going to see the CAD push up. All right. Maybe not that much, but push up. And then the next moment, you're going to see the NFP gets released, and then maybe the dollar weakens, and you're going to see the dollar try and push it back down. So it's going to bounce around in that way. CAD trying to weaken, dollar trying to weaken. It's just going to bounce around. So it's going to be choppy. Usually when it comes to that scenario, I wouldn't get into anything on the US CAD. So I would say stay out. CAD employment pending. Right, together with the NFP. Okay, now remember that for gold, yesterday we were talking about 61.8. If it's broken, and above 25.08 could trade up to 25.20. Look at what happened on gold. We were talking about this just yesterday, right at that point, right? That was during the session. I got into this. Right after the session, it broke up, got into a trade. Within the 1, 2, 3, 4, 5, 6 hours, it got up to 25.20 right there, exactly as we were expecting. Up there, came right back down, tested that level again before pushing up slightly. Okay, so now that that's all done on the dollar, on the gold, not the gold, on gold. Actually, I deleted that, but I want that back. I see a question there, Diana. Let me get to that shortly. Okay, so I want to still highlight this point because of how it reacted there, and there. So 2506, right? What I'm anticipating, you look at dollar trying to bounce back up, gold, it's in that nice range. Okay, so what you could be looking for here, here we go, is that it comes down to this point, right? It comes down to 2506 again. And wait, where am I? It comes down to this point here, right? And then it could push back down. But if it does push back down, that's more likely to mean the dollar strength scenario, which we're not planning for so far. So what I would be looking for is either it comes down to this point and bounces, or it comes right down and, well, no, wait, it comes down and hits this level, then I'll be looking for buying opportunities. So I'm not going to do anything on gold at the moment. I'll be looking for a reaction at 2506. Okay, we've traded it up very nice. As much as we've traded yen down, we've traded gold up. Time to take a little bit of a breather. Gold is retracing. Look for reaction at 2506. Possible bounce. If broken, could trade down to 2480. I don't want to sell it down, but you could if you wanted to. We'll look for that. Okay. Now, with that said, answering the question, if US yen would just consolidate or doesn't make any big moves, you think Euro yen and pound yen will go down, as you think usually yen drives or yen pairs. What I think could happen here, oh, I'm so happy it closed out. Okay, what I think could happen here is that it'll come down, bounce around this area. It might even break, but we know that for a big key level, a spike down, a break is going to result in a big retrace back up again, right? So I think that it might push down, push right back up. That could lead to this pushing down quickly and then coming back up again. I think that any downside or potential downside on the euro yen and on the pound yen, which doesn't seem like it's forming up now, could be very short term, could be very quick, could be a big spike and then a bounce back up again. So yes, I do agree that the yen does drive the yen pair, the US yen does drive the yen pairs quite a bit, but it could be a quick spike and bounce back up again. Okay, but I still kind of like this to bounce back up. I think it's dropped a bit too much, right? If you think about it, start of September, this week, we were right there. It's gone from 147 right down to 142, 500 pips to the downside. We've caught multiples of that. let it retrace, let it come back up, and then we can maybe sell it back down again or buy it back up. We'll see. Okay. Now with that, what's my last one? Oh, gold, oil. Nothing exciting here. Telemedia was asking about this. I think that it's consolidating. There was a deal done about the supply. OPEC output plan delay does not surprise. Oil set for weekly loss despite output hike. Delay. Head of data. Yeah, I think it's just going to consolidate, consolidate in that whole area. It seems a little bit too optimistic that it could push much lower. 6.9 seems to be a good, strong support level. A Lingopedia, no, I don't do any copy trading. If you see anything out there, again, if anyone sees anything out there on Telegram or this or that, signal copy trading, don't do that. I don't do that. So please, they might be using my name, my face, my whatever. Don't fall for it. And then with that, so nothing exciting on US oil, on WTI there. We'll try and get a little bit excited about the euro pound, but it's still slowly pushing. We'll see how that forms. And that's because of the pound dollar coming back down. Okay, so now please remember that if you are trading the non-farm payrolls, it is going to be a big and volatile event. It could move beyond logic, but moving beyond logic is always going to last longer than the margins and in your trading account. So if it doesn't make sense, don't trade it. Please trade well, trade safe, have a good weekend. You'll probably notice if you're subscribed, if you haven't already, click like and subscribe, and you'll probably notice a couple of changes on the Discord channel. You'll notice a couple of changes on the YouTube channel as well. I've launched a membership program. I've launched the TSRI MACD strategy. As much as you can, do help me out. Support the cause, support the channels. I greatly appreciate that. And I'll see you all next week. Take care now. Bye bye.